Hi, I'm Shashank Bhargav, and you're listening to Three Things, the Indian Express news show. The confirmed number of coronavirus cases across the world are now approaching 1 million, and the virus has now killed over 48,000 people. To talk about India specifically, over 2,000 people have now been infected so far, and the death toll as of this recording has risen to 53. The crisis that we face due to this pandemic is unprecedented. In previous episodes, we have discussed how it is affecting migrant workers, burdening the healthcare system, and changing our daily lives in ways we hadn't previously considered. Apart from the toll that it has taken right now, its impact on our lives will likely remain even after the pandemic has ended, especially its effect on the broader economy. In this episode, we will discuss the ways in which the virus is already impacting the economy, the kind of financial crisis that will arise out of it, and the measures that our government will need to take for it. Udit Misra, who writes on the economy for the Indian Express, joins us. So, Udit, could you first talk about the ways in which this pandemic, this outbreak, how is it affecting us at a micro level, the economy at the micro level, and then you can explain to our listeners how it is impacting the larger economy.
So, at the heart of the problem here is the fact that whatever we are doing to save ourselves from the virus also is hurting our economy. It's hurting our ability to interact as economic agents. And that starts at the very basic level, and then you can just blow it up at a macro level, which is just an aggregate of everything. So, if you're not allowed to go out and buy stuff, and your retailer cannot do the same with his wholesaler, and similarly between two businesses, if people cannot come together and interact and either produce things or trade things, then it's at the heart of it. So everything, it's basically tools down. And in terms of what is the impact, the answer is as simple as that. Whatever business was is now coming down on a daily basis. So whatever business you did the same time last year, the same day last year, and whatever you hope that you would add to that number, that is the loss. That is exactly the kind of loss. And actually, the loss is more than that, primarily because if it was only a sectoral problem or a transient problem, one could understand. Right now, it is basically saying that don't do any work today, don't do any work tomorrow, don't do any work for the coming 2 weeks, 3 weeks. And there is a question mark on how long this will carry on. There's also a question mark that even if there was no lockdown after a particular point, things will not get better because there are all these notions that the virus may come back in a more vicious form later on in the year towards the winter when the temperatures subside or whatever. So, I mean, the notion that human activity itself, which is the heart of why economies generate the benefits that they generate, it's at the heart of it. And this problem is just taking away the basic building block of that.
I mean, in a typical economic crisis, the government encourages people to go out and spend money. And in this crisis, everybody is trying to make people do the opposite. Like they're encouraging people to stay home and limit what they do.
Exactly. So, I mean, now the immediate impact would be that most of the economic activity not only comes to a stall, and because you were working at a particular X level of economic activity, there would be a question mark that who then pays the bills for that, right? And who keeps the system going for even 2 or 3 weeks or even a month? Who keeps that thing going on? There is no free lunch in that sense. We often think in terms of governments bailing us out. And yes, bailouts of this nature are bailouts only in a limited time sense. Eventually, even the government doesn't have money in its pocket. So when it says that we will bail you out, it is borrowing from a future generation and giving you the money. That I think the listeners should understand, that there is no free lunch here. So when we say that the government will bail you out, or these different countries are giving this money, governments are giving this money, essentially the idea is that future taxpayers, us and our children, in that way, they would be paying for this, for the bailouts.
Could you give a typical example of, let's say, if we imagine an average person in India, what are the various ways in which he or she will be impacted because of this?
So imagine somebody going to a factory. Let's take manufacturing, a good example. You go to a firm where you work the whole day, you get a salary, you pay your bills. Bills are of the nature of basic groceries and your kids' education, some health bills. Maybe you have some EMIs and stuff, car, home loans. And now that the economic activity has been stopped. Now, either it has been stopped because of the lockdown or it will be affected because there is not much demand. Suppose the lockdown is over, but there's still no demand. Say, if you're working in a car manufacturing plant, suppose there's no demand for more cars. Everybody's saving money and not wanting to buy a car. Now, what do? You have certain bills to pay. You cannot defer them. You can defer them maybe because the government gives a diktat and you defer it for 2-3 months, but the costs to pay there also, but eventually it'll all catch up with you. There are all these notions that, don't pay for this, don't pay for that. What you do not pay is essentially the income of somebody else in the economy, so it sort of snowballs. Basically this just becomes an unending problem because the whole economy can unravel this way. Take the example of a teacher and see what happens if he's not going, then he's not teaching, he's not getting the salary, he's not paying all the bills, and so on and so forth. Same for somebody who's running a restaurant or somebody who's working in a firm or a farmer. He's producing stuff, but there is no way he can actually get the remuneration for that, transport his material, his produce. Retailers, wholesalers, no interaction. So this is quite unbelievable. And we honestly, I don't think we've seen anything of this nature, of this scale anytime in the past. It's the scale which is, if this was limited to one sector, one area, one region, these things are still manageable. But a complete lockdown, a complete country, the whole planet under this effect is quite a difficult thing to handle.
How would you say this compares to the 2008 financial crisis? I mean, that was the last time something of a large magnitude, like a major financial crisis, happened. How would you compare it to something like that?
So there are two ways to look at it. One is obviously to look at the contraction that happened to economic activity. Now, the estimates that have come out are placing that the global GDP will contract by 1% instead of growing by 2.4 or 2.8% in the current year. In 2009, when the global financial crisis had happened, the GDP had contracted by more, 1.7 odd percent, I think. But I think that is still not understanding the magnitude of the problem we have here, because the other way to look at it is to look at what created the problem, what were the sectors that were afflicted by it, and what were the solutions. Now, global financial crisis, which was the biggest crisis that we've seen in many generations, and all the way going up to, only the Great Depression is what we are reminded of. Beyond that, was the biggest problem, and it affected a lot of people across the world. It wiped out a lot of individual wealth and incomes and jobs and employment. But still, the government had the tools. Across countries, governments had the tool to somehow counter it. That resulted in all kinds of problems for all governments across the world. Like India also was affected by that, even though the crisis didn't start in our country. Our growth rates got hit. Say exports got hit because the global markets demand was faltering, and we had to spend more. Our governments had to spend more to somehow boost growth. Our companies had over leveraged. Our banks were saddled with NPAs, and we've seen that since 2009 till coronavirus became this bigger problem. We were still talking about how the 2009 crisis had left its impact on the Indian economy, how fiscal deficits never came back within bounds, how NPAs continued to rise, how companies remained over leveraged, they could not get rid of their debt, and how investment faltered, how exports never started rising the same level, and how even consumption, domestic consumption, was getting hurt. So all this while we were talking about all of that. So it's not as if that crisis, which was still limited to certain sectors, and then through governments it sort of reached us. This coronavirus thing, it may have originated in China, gone to Italy, whatever, but this is here and now. And it's not the number of deaths. I keep saying this, it's not the number of deaths per se. While 2% mortality in India is a huge number, but it's not the number of deaths per se, it's the uncertainty and the fact that those deaths will not happen in one quick go. This is just an uncertainty that will carry on for a little while, because you do not know when the virus is going to come back. There are different estimates. Somebody has predicted you need at least 49 days of lockdown. Somebody's saying 21 is good enough. Somebody's saying this will carry on for 6 months. The virus can come back. Now, this uncertainty and the preventive measures that you take for such a thing is lack of economic activity. I think of the analogy that we think about coronavirus itself, that the coronavirus actually doesn't kill you. It is in killing the coronavirus, the damage that our own body takes on our own vital organs that kills us. So something like that is also a huge threat for us, that the action we are taking to evade or avoid coronavirus affecting us is also an action which will have a massively debilitating impact on the economy and very real impact on people's health and well-being. I mean, it in itself, I mean, somebody was collating those numbers of how many people have died just because of the lockdown and maybe the lack of planning that was there in ensuring, and the number of people who are losing their life just because they have been shunted out in an unplanned manner.
What are the kind of predictions that IMF and other rating agencies have made about the economic impact this pandemic would have globally, and particularly how it will impact India?
So everybody is now saying that the global economy will go into a recession. There'll be contraction of overall GDP, which is to say that this year we will not have as much GDP as we had last year. We'd have less of that. So instead of building on last year's total amount of goods and services, we will actually contract. And some estimates say that India and China perhaps would be the outliers, because China seems to have gone over the hump and now is sort of getting back into its groove. And India doesn't seem to have been afflicted by this virus as much as one would have perhaps imagined or been apprehensive about in the beginning. I mean, these estimates are still preliminary estimates. We just do not have a handle on what is the kind of impact it would have eventually.
So, when we are talking about, there's a chance of a global recession, what are the chances that India slips into a recession compared to other countries?
Well, RBI refused to give a GDP estimate in its last policy statement. Now, at one level, it would be considered correct because it's such a dynamic situation. What do you say? And things are changing so dramatically. So, how do you estimate a change? So, many other estimates have thrown up some numbers, because we've seen overall absolute number of employment actually coming down between 2012 and 2018. And we've seen consumption fall for the first time. We've seen unemployment at 45-year high. And this was all between 2012 and 2018. And the official numbers also acknowledge the growth faltering quite rapidly, quite sharply, only after 2018. So things could not have gotten any better since 2018, because since 2018, we formally also are now faltering on growth. So unemployment would have risen, people would have been pushed below the poverty line, health and nutrition would have taken a hit. So I'm saying that in any case, we were struggling. Our government finances have been struggling. And in any case, all of this was happening before coronavirus. So now, what will be the impact? Now, if you're growing at less than 5 without coronavirus, now if you do tools down and you do it for, say, appreciable period, say we already have a diktat for 21 days, if it is extended to anything close to 1 month or 1.5 months, then that takes a huge toll on what the economy can achieve overall. Because basically, for this period, you wiped out a huge section of the economic activity. So that part of the GDP will never happen. And what we are seeing, and this is where it becomes so difficult, it's not as if you can, the day after lockdown, everything will go back to normal. Maybe in some offices, it will go back to normal. In my office, in your office, it will go back to normal. We will get back to work because we have been working from home and in one way or in another capacity. But for companies that were running on hired labor, and that labor was maybe migrant labor, and if that labor has already gone, then if you look at the migrant calendar app, this is also reaching on to a point where they often used to take a couple of months off, June and July. So if the migrant labor has already gone, then it may be difficult for you to immediately get that labor. So it's not very easy to put together things very quickly once we have disrupted it. And we have not disrupted it in a wanton manner. It had to be done everywhere in the world. It is being done. But if this carries on for long enough, many companies will go belly up. Frankly, a lot of people say outer limit would be 2 months. In 2 months' time, if suppose economic activity remains in this pause mode for 1.5, 2 months, many companies will have a issue. They will not be able to survive. They'll have many other problems. The disruption would be too much, and it'll take months, if not years, for everybody to get back on track. Not to forget the demand side of it. I mean, listeners can ask themselves, how soon are they likely to go out and eat as often as they did in the shops, in the restaurants? And how soon are they likely to allocate the money for the next car or for the next phone? Chances are that out of such a crisis, a lot of consumers will hold back consumption because they are worried about another similar crisis. So, we were already talking about how India has now perhaps settling down into a 5 to 6% kind of a growth trajectory over the coming 3, 4 years. But with this crisis taking over, and if this carries on longer, well, the number, perhaps the sort of benchmark number, would perhaps come down significantly further.
What are the kind of measures that the Indian government has taken so far? And how do they compare to the measures that other countries, say US or some other European countries, have taken?
The measures what Indian government and Indian authorities, both on fiscal and monetary side, have been trying to mitigate the immediate problems. So, as we have seen, the government has tried to give some sops, some money, double the rations, provide some kind of a humanitarian help to people who are most badly hit by this and who have no insurance or social safety net to sort of bide their time. The informal sector, especially the migrant workers or the poor who typically made use of Narega or who used to get subsidies under different benefit schemes. So the government has tried to push as much money as it could under the circumstances. There have been calls that the government hasn't done much, and that is one massive difference between India and the rest of the world. US has a $2 trillion rescue plan. To understand in terms of perspective, India's total GDP is 2.8 trillion. So what we as a country produce in a year, almost that amount is what they are going to spend on rescuing the economy. Whereas in India, we are still quibbling over the amount of money that the government has spent. On the face of it, government has given a package of 1.7 lakh crores, which is around 0.8% of our GDP, 0.8%. But a lot of people say that there are certain components of it, of this package, which were in any case going to be there. So it's not specific to Corona. So another way to look at it is that actual additional spending that the government is doing is much lower than even 0.8% of a GDP. It's maybe 0.4 or 0.5% of the GDP. So if you compare it to some of the European countries, US, UK, Canada, there's actually no comparison. The amounts spent there are much bigger. And because they have more money that they can spend, they're also doing more in terms of, say, providing wage subsidy to companies. So one part is that on the fiscal side, on the government side. What we've done otherwise on the monetary side by the RBI is that what RBI has done is tried to reduce interest rates further. And as many listeners would know, that RBI had been pushing down interest rates right through last year, trying to make it more attractive for businesses to invest. But yet, investments never took off last year, despite the RBI's rate cuts and massive corporate tax cut, primarily because there was no demand in the economy. So businesses didn't find it worth their while to actually invest more. Again, RBI has tried to do the same, that it's tried to cut interest rates and provide more liquidity in the system. But how much would this help? Again, is a question we'll have to see. To some extent, it should help because many companies are facing a real drought in terms of money and funding. But there is a larger question mark that the problem of demand, which was there before Corona, has just got accentuated now and will get worse in the coming months because people will hold back. So, do companies really need to ramp up production big time? So, whether what the government has announced till now, both for the formal or the informal sector, and what the RBI has done through its office and its policy, whether that has the impact to save the economy, we'll get to know only in due course when we come to that in the next 3 to 6 months, we'll sort of have a better understanding.
In what ways do you think, this crisis will change the economy and specific sectors?
So, because this is again a problem that has highlighted the health aspect, so I suspect that in the coming years, you would expect people to demand more of health provisioning from the government. So that is one big change I expect to happen. Actual ability of any society to handle healthcare problems is being called into question. Many of these European countries, which had much better facilities per thousand people or per lakh people, they have found it overwhelming. India, under normal circumstances, struggled with healthcare provisioning. So I think, and we were just reading state budgets some time back, and we found that only 5% of state expenditures used to happen on healthcare. Now, there would be a question mark henceforward that people perhaps would expect, like the Delhi government has done. It has prioritized expenditure on healthcare. I would suspect that both at the central level and at state level, spend more on healthcare and healthcare provisioning so that there are primary healthcare centers, there are government hospitals, and it's not just a building, it's also equipped with doctors and with material, with actual medical supplies. So that is one big thing I suspect will happen, that on the health side, I would expect that people and policymakers both will realize that India is grossly inadequate in handling such a thing. So that is one thing. The other is that I also expect that, and this is a positive, that Indian government and both state and center and people as a society, we'd be better equipped to deal with this kind of a challenge next time when it happens. As we've seen in Vietnam or South Korea, many of these countries which suffered from other similar respiratory illnesses like MERS or SARS, they were much better equipped. So they saw a massive outbreak, but they could control it much better. And they could control it because they had the legislative paraphernalia, they had the ability in the medical system to counter it. And the society was cognizant of the challenge. As we've seen in just the last 10 days of lockdown, it's not very clear if everybody truly understands what is the nature of this challenge and what are the social decencies you must follow. I mean, it's almost, when you disregard a particular health diktat, in this instance, you would be putting so many lives at risk, your own family members. So that ability to understand the nature of this challenge would perhaps equip us deal with similar crisis when it happens in the future. So that's where we are at.
You were listening to Three Things by the Indian Express. Today's show, as always, was edited and mixed by our producer, Joshua Thomas. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share it with a friend or someone in your family. It's the best way for people to get to know about us. You can also tweet us at Express Audio and write to us at podcasts@indianexpress.com.